Welcome to this evening's webinar, How to Stay Alive in a Recession. For those that don't know me, my name's David Evers. I'm Managing Director here at Adviceco, and I'll be one of your co-presenters tonight. I'd also like to take this opportunity to introduce Troy Marchant. By Troy, he's one of our fellow principals here with Adviceco. He's our not-for-profit specialist. So Troy's clients in the not-for-profit field absolutely appreciate his skill and expertise in this rapidly changing environment, and making sure that Troy's been working closely to making sure that they're adapting to this new world post-COVID. So again, thank you for your attendance tonight. Congratulations, just by taking the time to be here this evening is a positive step to help grow and improve your business and a not-for-profit business. For those that aren't already working closely with us, following tonight's presentation, you will have the opportunity to sit down and work with one of our experts one-on-one to explore strategies, opportunities, and how we can help you achieve your goals. A little bit more about that later, but we are truly living in extraordinary times. We've seen a significant number of businesses, including some not-for-profits, close their doors, being compelled to basically close their doors, whether they've lost customers, they've lost donors, they've lost markets that traditionally they work in, or even their supply chain. So, and all this change is occurring at a time when there remains a continued health threat, and that's worrying owners, managers of businesses, their teams and their families. So it's clear that pretty much every business will be severely impacted in some way by COVID. And so the better business clients and the better, more organised clients that we are working with are using this crisis point to focus and drill in and make sure they're better prepared post-COVID than what they currently are today. Okay, let's see if we get this cracking. No, I've lost the point of there, mate. Beautiful. Thanks, Troy. I'll give you a little bit of information about our presenter tonight. Myself, David Evers, I've been working with small and medium-sized businesses since 1986, a lot longer than I care to remember. Troy started working in the accounting profession as a chartered accountant, or is now a chartered accountant, but is an experienced business coach, and he's been working in the accounting space since 1991. Slide there for me, Troy, thanks. A little bit about us here at Adviceco, but tonight's not really about us, it's about you. We've been presenting client presentations for well over a decade, be it on business improvement, financial strategies, or even dealing with some of the COVID matters that we've done in more recent times. So we do really appreciate interactive presentations. We found that that's the best result that our clients get from these presentations. So in technology, you'll see at the bottom of your screen, you'll see there's a little Q&A button that's there. I'll be helping to facilitate any questions that you have during the presentation, so feel free to ask them. We do have a few people on board tonight, so I mightn't be able to get to your questions straight up, but we will try and deal with it as quickly as we possibly can. If we can't get to your question tonight, we won't lose that. We've got a team that are tracking these questions, so you will get the opportunity to actually get an answer if we don't manage to get to it in tonight's presentation in the interest of time. Remember, following tonight, there will be the chance for you to sit down one-on-one with one of our team and make sure that we are adapting your needs or dealing with your needs and see how we can best help you in that space. So keep a note of your questions just in case we don't get to those, but we'll absolutely have the opportunity to deal with those at a later time. So what brings us here today? Well, basically, my job in the first part of this presentation was pretty much just to give you a little bit of an update on where we're up to with the stimulus measures and what the government has announced and some key matters as to where that currently is. I'll then we'll throw to Troy, who will then give you some details about how we've been working with some of our not-for-profits and some of the business systems and some of the improvements we've been helping in terms of mindset, processes, and accountability and even governance systems that we've been using this time out in the COVID crisis to try and help those clients in that space. So I'm going to touch base on not every one of the stimulus areas, but I do want to reflect on a couple of the key stimulus matters that have occurred, and just to give you a heads up as to where things are up to in terms of the accounting world and what we're seeing in the wider market. There's 10 main areas there that you'll see on the slides there in front of you. And basically, I'm not going to go through each one of those, but I am going to touch base on several. The first being JobKeeper. So remember, most people, if they've had the opportunity to, or the capability to register for JobKeeper, they already have. You will recall that basically you need to have a 30%. 30% for businesses, 15% for not-for-profits. Now, if you've already registered, then that's great. You should be getting the money from the government. If you haven't met that criteria yet, there still is the opportunity to register if you are going to be down that 15% in not-for-profit world. So you haven't lost that opportunity as yet. So keep an eye on that. Make sure that you're talking to your advisor team, or happy to help you out if you need support from us, to basically make sure if you can meet that criteria, then basically the stimulus money should be there in theory for at least another 5 months. Yeah. So keep watching that slide. It's not lost yet if you haven't already registered. So if you have been able to register for JobKeeper, then conceivably you are talking to your landlord or have had conversations with your landlord. If you haven't, then you should be. Effectively, there was government principles that you may or you probably are aware of, but basically there were guidelines to what's acceptable when you're negotiating your rent in the COVID world with your landlord. So if you need support or you need assistance to actually have those conversations with your landlord, we can help you out in that space. If we have a look at, you'll see some of the tax relief that's there in the flag. BAS discounts, or the cash stimulus that was coming from the government, should have been starting now to come through on your BASs. So if you haven't seen some of the original cash that was promised by the government drop into your BAS or your integrated client account, or even in your bank account as yet, then perhaps have a look at that. We have had some that have been delayed.
There's been a couple of bugs in the system, but they're coming through.
Yeah, so we are seeing them. So keep an eye out for that if you haven't already got it. Remember, this in some cases, businesses will get $100,000 from this. Yep. Over the next 6 months. In all cases, if you met the basic criteria, there's at least $10,000. So you should be starting to see some of that. So again, if you haven't had that opportunity yet, or you haven't seen that money yet, might be time to have a bit of a chat to someone to make sure that you're getting it, or that they've got you in the system. For those who are looking at strategic plans and perhaps improving their facilities or their equipment or their what they're doing in their businesses in this particular difficult time, when the instant write-offs are still available there for any equipment installed and ready for use by 30 June of up to $150,000. And if you can't have, you won't be ready to move in that space, then there's accelerated depreciation that still will be available for new equipment, that is, after 1 July, which is still substantially higher depreciation that you would otherwise ordinarily have received. So good time to be doing your planning for what your capital requirements are, looking at what other equipment you're going to need, and perhaps it's a good time to invest in that equipment, which is what the stimulus measures are designed to do. And last but not least, basically the small business grants, the New South Wales government, they are available for businesses and not-for-profits who had a substantial or significant reduction, which happens to be 75%, in at least 2 weeks of the period since March. So those small business grants have to be applied for. They won't be just allocated to people who have suffered more than 75% loss. So if you haven't already applied for those, the closing date is the 1st of June. Haven't been advised of any likely extensions. Could happen, but it would be a great time. If you haven't already got your $10,000 on offer, then to consider whether you meet the criteria. We can help out, in that space. So we have had a significant number of people who have invested in their business decision systems, better accounting systems, spent some of that grant money on making sure that they're a better business moving forward, and using the state government $10,000 to help out during that process. So thanks, Troy. So that really leads us to where to from here, and Troy's going to take us through some of these key elements. But as we already know, that the government has provided some relief, and this is particularly relevant in the not-for-profit space, where you've got boards typically who are basically carrying some degree of financial risk, and you've also got management who basically need to make sure that the businesses are able to pay their debts when they fall due. The way that the bankruptcy laws have been changed and the trading law insolvent rules have been changed, there's a bit of a breathing space available for not-for-profits in particular to sit back and reassess their businesses and make sure they've got a big plan, or the right plan for how they come forward post-COVID. So that involves making sure that we're seriously analysing cash flow, board packs, and also looking at accounting decision systems inside these businesses, and now's the time to do that. So Troy's presentation is absolutely going to drive into the common practice of common sense principles that deal with business management, and basically no better time than to look at that in this COVID environment right now. So without further ado, Troy.
Yeah, thanks, David. Look, it's a good point to touch on that. Just while you mentioned that last little bit there about cash flow, where I'm going to go tonight, guys, is really around cash flow and some of these things that can assist us in small business, particularly not-for-profits. But just on that, there was a little late amendment to some tax legislation that got snuck through around December and January of this year, which could potentially put directors of not-for-profits on the hook for unpaid GST, PAYG and super. So there's a few things there that you need to be mindful of, which we can touch base, as David mentioned, in that complimentary session where we talk about things. Really, really important. And this time to use for looking at things like cash flow is going to be important to make sure that you're not exposed. But more on that a little bit later. So look, as David mentioned, look, I work with not-for-profits. I work in a lot of businesses regarding coaching. Some of you may have been to a couple of my workshops before. So I'm going to talk about that. Look, just a quick intro on myself. Look, about 11 years I've been running workshops for businesses. Over 2,000 businesses have come through those workshops in that time. And tonight I'm going to share with you a little bit about that and just tailor a little bit for not-for-profits. You know, I've got a bit of a saying, and that is that success hides all sins. Or another favourite one is when the tide goes out, you're soon going to find out, you know, who's been skinny dipping. And we find that with businesses, and at the moment in COVID, you know, those businesses that aren't looking after their cash the best way that they can are getting found out. So what I'm going to do now, I'm going to flick you through the next slide, and basically just before I jump into not-for-profits, we did a bit of a survey a while ago, and basically to look at what the top things were in small business. And I'm going to share that with you. But the slide I've just put up in the moment is taken from a recent Australian Institute of Company Directors forum, which I sat in on in 2019, and it listed out the top issues that are facing not-for-profits at the moment. I'll just talk a little bit to them, and then from there we can sort of dive in and look at them, how some of them might be specific for you. And by the way, if you've got any questions, David's going to take those down. He might jump in and stop me, and I can answer those.
Yeah, and I apologise in advance for some of the people I've already responded to. My typing skills aren't terribly flash, so okay. You'll have to do.
He's got big fingers. So the first one is complexity. So the top five, look, as you guys will know, as CEOs, the not-for-profit space is incredibly complex. Complex business models, complex income models. You've got the NDIS. You've got to get, to a large extent, you've got to be self-funded. We want to future-proof the business without relying so much on political forces. We've got to go to the market. We've got to get our facilitators and our service team to look for other revenue sources. So it's very, very complex on articulating that and getting the team on board. The second one, digital disruption. Look, that's everywhere, not just in not-for-profits, but that's really about being able to take advantage of tech. And, you know, during COVID, this period of, you know, maybe a bit of a slowdown in activity, absolutely the right time to lift the bonnet up and look at how we can get more efficient. Changing demographics, second one there. The fourth one, cash flow. That's probably one that I'm going to spend some time on with you tonight. You know, having really good financial management, access to data, making sure that you as a CEO and your fellow board members aren't going to sleep at night wondering, you know, is our shirt untucked because we haven't paid our BAS, haven't paid super, things like that, that you could potentially, in recent legislation, become personally liable for. I'm pretty sure that's not a reason that you would have signed on to be a, you know, to be a director of a not-for-profit for. You don't want that risk. So we want to make sure that we're well governed. And the fifth one that was concerning was culture. You know, how do we have a lean and efficient team where we are working on the things that make us effective? You know, I'm telling you right now, if you've got people out there entering in data manually, stop there. Let's have a chat about it after this session, because we want to make sure that we're adding value. And technology and certainly digital disruption is making that a lot more accessible for businesses, including not-for-profits. So tonight, what I'm going to drill into, these are the areas I'm going to cover tonight. Number one, I'm going to talk about that thing called the Super 5, is what we call it here. And these are business principles that apply to all businesses, including not-for-profits, and a little bit of a success formula there, which we hang our hat on here. Number two is what we call the growth equation. And this is a way for you to look underneath the bonnet of your business and say, well, here's how we get our revenue. Here's how that revenue turns into, in not-for-profit speak, into a surplus or a deficit, and then ultimately how that turns into cash. Bit on break-even analysis. It's a common question I get asked by CEOs and/or finance managers. Troy, how do I work that out? Because typically you won't be selling widgets or stock. You'll be selling labour. So we need to know what is the cost of that labour, and certainly from an NDIS point of view, for example, you know, what's the unit costing? How are we costing all this stuff out? How are we allocating it across our business in all our different cost centres in our business? Number four, profit drivers. Where's the cash? And then lastly, and I'm going to spend some time on this, really positioning you and talking to you about what we'll cover in that complimentary session and how we're going to really look at your business and business that you've got, the issues that you've got specifically related to you. And that's going to be really, really important to cover off. So to jump straight in, let's have a look at this, what we call the Super 5. And these are 5 pillars, if you like, that when we surveyed those businesses around Australia to come up with our workshop, every single business that was succeeding had all of these things. The first one is growth. Now, it sounds obvious, but it's not. Many businesses say to me, Troy, we don't want to grow any further. I'm happy with my staff. But the problem with that is that if you're not growing, then you're going. And in other words, people who are interested in growth will just surpass you. So you must have an eye on growth. Number 2 is profit. My saying there is that turnover is vanity, profit is sanity. What's your profit? What's your profit by business unit? What's your profit per channel? What do you do? How much, in terms of all of the different services that you may offer, for example, in NDIS, how are you tracking that and how are you making sure that you're making profit in each one of those?
Yeah, Troy, Deborah has raised a question here which is relevant to what we're talking about here
Yeah,
at the moment.
Great. Thank you, Deborah, for the question.
And Deborah's mentioned that many of the government funding arrangements, they actually have limit the amount of surplus that some of these not-for-profits can actually acquit. So I know you've dealt with that previously with not-for-profits.
Yeah.
What have you seen some of the strategies that some of the successful not-for-profits have used to try and, if you like, get the benefit of some of those surplus?
Yeah, look, and I'm coming up into a slide in a minute, Deborah, as well, which talks about some of the challenges you have, and one of them is political. You know, you show $1 million surplus for whatever reason, because you've had some wins and you've done some stuff and, you know, you're in front. Well, probably not the best look in terms of your mandate and your mission, depending on where you are and what you're spending your money on. So in terms of that, the first thing that we need to do is be making sure that we're tracking that and reporting on that in a timely manner so that we can begin to see that bubble. One of my not-for-profits, for example, and I won't spend too much time on it, but within T+4, we know what our profit is, we know what's coming, we've got a board pack out, and we're making those decisions, and we're really looking at, okay, well, here's the strength of my balance sheet, what's next? And I'm going to talk about it because one part is the surplus and deficit, but really for not-for-profits, the bigger issue probably is around the strength of your balance sheet, because there's a lot of activity in that space. So I'll come to that.
Yeah, I suppose too, the accounting system, a lot we've seen with some not-for-profits don't properly allocate some of the things that should be properly acquitted back to some of those
Correct.
projects. And if you haven't got the right accounting system, that makes it really easy to actually work out what you've spent, what you haven't spent, and allocating those to the cost centres in accounting language, which we talk about, it's very, very difficult. So, Deborah, in terms of that particular question, it's a great opportunity to reflect on some of those challenges you've maybe had in some of that space. Sit down with Troy, and he's had really detailed experience in this space, so he'd be more than happy to have a chat in that space.
Yeah, well, it's that third one there as well. So assets, so value of the balance sheet. So why is that important? Well, again, in small business, maybe the profit sector, very, very important for mums and dads who are running businesses. In the not-for-profit sector, we're seeing more and more merger and acquisition type activity, and the strength of that balance sheet and being attractive to either be a buyer or a merger is so important, because the stronger that your balance sheet is, the more likely is that you can future-proof, deliver on your mandate, deliver on your mission. So it's super, super important. Protection, again, in the Super 5, different form, but I've tailored this tonight for not-for-profits. What sort of protection do we want? Well, Deborah, to answer your question, we want to make sure that political influence, that we're not, the business is prevented from, as much as it can, being sidelined by politics, government, macroeconomic forces, the type of employment and roles that we have. So there's certain things in there which come back to that really good governance. And finally, the last one, cash flow. Profit without cash is not a good look. And it can happen because, if you've got all your money sitting in debtors and everybody owes you money, well, you might well be profitable, but you don't have money to pay for wages and rent next week. So it can actually happen. These Super 5, for want of a better way of talking about them, are really those pillars in small business, in any business, that are a good habit. So we're going to drill into those a little bit more now, but I wanted to canvass those right up front. So drilling into cash flow, how could that hurt? Well, here we go in COVID. What are we seeing? Well, quite simply, if your customers are dropping off, you're having less services, maybe you're doing less day activities, your day programs have dropped off, maybe someone in their SIL has fallen away if it's single independent living, maybe you can't have as many people in one of your group homes for whatever reason because of the public health order. Quite simply, your revenue is going to drop off. So where is it going to hurt? Well, you're going to feel it in wages, you're going to feel it in rent, and you're going to feel it in generally in leads. So it's more difficult to generate leads, clients return less often, and you can't collect debtors at the time of sale. So it's what I said at the start, David, it's really around when, success hides all sins. If you've been swimming without your trunks on and the tide goes out, you're going to get found out. So what's the success formula? How do we improve on that? That's really the dilemma question. Well, if I had to bottle up one formula for small business and in any business, not-for-profit, probably more so for not-for-profit, it's this one here, and it basically works like this. You make a whole heap of decisions in your business every single day. Multiply those by actions, and you're going to get a certain result in your business. Let me put it into context for you. If you make a 10 out of 10 decision in your business, but 0 for 0 action, 10 times 0 equals 0. So you're not going to get any result whatsoever. 10 out of 10 decision, make a 10 out of 10 action, well, then you're going to get a great result. So really what this slide is talking about is implementation. How are we implementing? What have we done today? What are we doing in this period where during COVID, we may have a little bit less activity. So we've reduced some staff. We're really looking at roles. We're really reinventing. What are we doing right now? What decisions have we made? And the most important thing, what actions have we taken? Because this is going to end. Like anything, this COVID crisis will end. And at the back end of it, what I would love your business to be is a better business, because things are transforming. We're transforming. We're doing webinars. We're doing Zoom meetings. The world is doing Zoom meetings. We're working from home. So a lot of these efficiencies are coming through. So it's an opportunity to look at your staff and look at those activities. And where we're going to tonight is a bit about tech. Looking at those things and saying, well, could we do this a better way? And this model for success really works. I'd love it at the end of tonight that, you know, you've come up with a couple of decisions and you go back and you scribble some stuff down for things that you're going to implement. If that's happened, then David and I have absolutely done our job. So to help us with that and to help us with cash, because I'm really going to drill in tonight on the cash component, I'm actually going to get a bit of help. I'm actually going to use an Excel model in a second to show you how this actually happens in a real live example in terms of cash, because that's what I'm going to focus on. Before I do that in Excel, I'm going to walk you through what we call our growth equation, which is a model, if you like, to look at your revenue and to look at all the things that are driving that surplus or that deficit. And Deborah, maybe this will help your answer your question.
Yeah,
well.
this would be a really, the growth equation is something that's very powerful. We've seen lots of businesses. When Troy talks through this, if you think about the various components and how you're tracking them in your own business,
raise a question.
Yeah, it's a great opportunity for you to start thinking laterally about this. And again, back to what Troy pointed out there a moment ago, decisions times action is going to give you results. You can make various decisions to start tweaking with the levers and the drivers in this business. And I'm not going to steal Troy's thunder, but in reality, what you'll see is this is a really powerful tool. It shows just what is possible. So get your pens and papers ready. We're ready with the questions if you've got anything that you need to go through.
And feel free to write this, to take notes on this model, although we'll share it with you anyway. But I guess before I go into it, I mean, when I meet with the CEOs that we sit on boards with and we sit with not-for-profits, the things that they worry about, what do they worry about? You know, they worry about things like governance. They worry things about, well, does my strategy plan support where I'm going? And is that going to tick the box for the board? What do I show the board this month that shows that my business is effectively managed, that I've got systems and governance in place so that they're not on the hook for being sued or whatever it is? Well, one pillar, if you like, to getting that right is absolutely knowing your numbers really, really well and tech. And that's what I'm going to show you now. So over in this far right hand, I have a box called sales, but we all know that sales or income, if you like, doesn't just appear. It happens as a result of certain things. And by the way, the model that I'm going to show you here tonight is our generic model. But what I'm going to do after this in that one-on-one is walk you through how this is more specific for a not-for-profit. Over in the left, we have a certain amount of customers or a certain amount of clients, okay, in our business. When we multiply that by a retention rate, which we're seeing during COVID is coming down, we're going to get a certain amount of retained clients or retained customers, retained donors, etc. People who are, as part of charitable giving, are giving donations to the not-for-profit sector. When we also add to that a number of leads and a conversion rate and wondering what we're doing in that space to make that happen, when we have a certain amount of new customers, or clients. When we add them together, what I'm going to get is a certain amount of retained plus new plus number of customers. When I take those clients and customers, multiply them by transactions and multiply them by whatever the average dollar is in terms of, you know, whether it's donations, whether it's NDIS, whether it's other grants that we're getting, that will always equate to an average transaction. I multiply all those four out there and I get my income. I deduct from that my cost of goods or COGS. COGS is, in not-for-profit, is the cost of labour. So how are we breaking up our P&L? How are we drilling into all the different buckets that we've got? And to work out, you know, and it's going to become important in the next slide when we talk about break even, because that's going to equal a thing called gross profit, and that's your profit before our overheads. And it's a really important number to know. Now, before I click the next button, you might be wondering why are some of these boxes blue and why are some of them white? Well, there's a very, very simple answer to that, and I'll put it up here at the moment. If it's in blue, these are things that we can influence. We can monitor them, we can test, we can change. For example, in retention rate, we can put a strategy in to go and knock on the door of the top 10 corporates on the Central Coast and ask for them, what do you do to be a good corporate citizen? How do you donate? What sort of things do you donate to? Is it part of your fabric of your business to give back to the community? That's around retention and leads. Similarly, the average transaction. Well, what are we doing in that space? Do we charge our clients for certain things? Are our fees too light? Are they too high? Expenses. When was the last time we did a deep audit into expenses? because that's very, very important to say, well, are we getting the biggest bang for our buck? Are all the people that we have in our team, the labour that we're using, the right mix for what we've got? To help us with this, just bear with me. What I'm going to do, I'm going to share another screen with you, and I'm going to share this screen with you, an actual Excel file, and I'm going to put some numbers around this so you can just begin to see how powerful that is. Hopefully everybody can see that now, because I've got a model here that takes what I've just shown you, and I'm going to walk you through and just to see how ultimately, when we change some of these blue boxes, it turns into profit, call it surplus, which ultimately leads to cash. And that's what we're talking about at the moment. So in this particular model, what I've got here at the moment is 500 customers or clients at an 80% retention, giving me 400 customers at the moment. When I take the new leads, which is 500, at a 20% rate, it gives me 100. So then I have 500 at the start, plus my new, gives me 500. When I multiply that out by the number of transactions, I'm getting about $1 million in turnover here. Less 40% cost of goods, less 500,000 in expenses is giving me a surplus, if you like, of $124,000. Now, for you, when we do that complimentary one-on-one, the idea is to pull it apart and have a look at things like your sources of income, NDIS, donors. I've spelt that wrong, but anyway, don't hold that against me.
I didn't type that. But probably was my typing.
I'm better at numbers than I am at spelling, even though I can tell that's spelled wrong. Donors and clients, to work that out and what those are for you. But the most important thing I want to show you is just how powerful this model is when we just start to play with some of these blue boxes, and the numbers begin to basically compound very, very quickly. For example, if I make that retention rate 90%, which is a 10% improvement, and the way we would do that is come up with strategies to improve your retention. If I was to put in one extra lead a week in this particular business, which makes that 550, and if I was to make that conversion rate, maybe 40%, maybe we do that by improving
sales
skills, getting the team up and running, and stressing to them the importance of saying, guys, we don't want to be reliant just on government grants, government money and donations. We need to be, out there self-serving as well. What you'll find here is that when I calculate, okay, you'll see here now that we've gone from 500 revenue providers to 670, simply by 10% better there, an extra 20% better there, and one extra lead per week. And this is where it becomes interesting, because now if I was to put in an extra service to this business and I was to increase my average dollar transaction there for whatever reason, and perhaps we can't in your business, but that's okay. In this example, I'm going to put that up by not even 10%. When I calculate, you'll see that my turnover jumps from 1 million to 1.7. If I was to sit with a business owner sometimes and say, let's get your turnover from 1 million to 1.7, quite often I get the question, well, how am I going to do that? Well, it's the wrong question. The right question is how do I get one extra sale? How do I get an extra $40, an extra $10 worth of transaction? How do I do the things that are in the blue boxes? Not how do I increase my sales? Because to be really blunt, you can't increase your sales. The sales is the result. It's the result of you doing something else over here. Really doing those decisions, multiplied by actions for something to happen on this side. And that's really the trick. And in a not-for-profit game, what I'm going to lead to in a minute in my next slide is, okay, let's start with some basics. Do we have our shirts tucked in? Are we getting quality data? Is it enough for us to go out and have conversations about the strategies that we need to do to future-proof the business? And what are we doing right now in terms of this time, the COVID time? Are we getting all the bells and whistles that David talked about, JobKeeper, et cetera, to make sure that we come out a stronger business at the back end of it? But it doesn't stop there. If I was to make the cost of goods, let's just say that was 39%. Let's just say that number there was 550. Why has it gone up? Because now we've actually gone and invested some money. You'll see here that this number here, our profit's gone, or our surplus has gone from 124 to 528, and we've actually put expenses up by 50,000. What we've done instead is we've got people in our business to drill into the blue areas and do that value add stuff. So the question is, a great question you should ask yourself right now is, are all my team working on the right things? Are they doing the right things to add value? Is there data entry? Maybe is there some hours there that should be reinvested somewhere else in the business? Because that's really what this is all about. Again, this slide here, we have a really good look together in that one-on-one. Just bear with me now. I'm just going to jump back into my presentation, back to the screen that we were on before. And you can see there, that's the screen that we've just been to, but we've just gone through that in Excel. So really, just to wrap this piece up and where that goes to, what I'm saying is the net profit ultimately turns into this next slide, which is really about your cash flow cycle. I'm going to talk a bit about that now. So, you know, that profit, where is it turning up in your business? Is it in debtors? Are you paying your creditors too fast? Do you have a debtors collection system? You know, when we talk about, you know, your BAS, are you behind? Are you spending money on loans and leases? And when we talk about the cash flow cycle, it really is a cycle, right from the point where you put the wages on, you collect your revenue from your customer, you send a debtor, you bank the money, and for some businesses that can be as long as 60 to 90 days. And it's not until you go right from the start right to the end that it becomes really, really critical. Most not-for-profits don't have things like stock and cost of goods in that regard, but what we do have is labour. And depending on your payroll cycle, you know, if your debtors collection cycle is monthly, but your payroll cycle is weekly, and you get some big licks at the back end who don't pay, well then you've got a problem. You've got a gap there that you need to be able to fund. So really, really important that we make sure that we're doing that, and we've got some systems over here in debtors and creditors. So some things to ask yourself in this space: what's it like doing business with you? You know, are you providing a wow service to your clients? Wow service to your customers? In the case of CEOs, what is that relationship like with our board? What's it like dealing with you at a board level? What information are you providing to them, and what do you think that they want to see? A couple of others up there, you know, that what's in it for me never goes out of style. Always be thinking with that cap on. What's in it for me as a customer, but also your stakeholders, the people that you need to report to. The FAB formula, you know, drilling into your features of your business, really articulating your mandate in what your not-for-profit is all about, so that people understand it clearly and concisely when you go looking, for example, donations or whatever it is. Getting the right people in the right roles. I've talked a lot about that, but that's a big thing for CEOs in the not-for-profit sector. And in some cases, outsourcing. In some cases, you know, drilling in and saying, well, I need that much expertise for that bit and that much for that bit. I don't need it all. And working out what the best allocation is there. This next screen, break even, which I said at the start I was going to cover tonight, and I'll only spend one slide on it, but really what this is about, and by the way, I'm looking at this slide is because one of the questions we had before tonight was, well, how do we calculate that? Well, quite simply, break-even point is where your income less your costs plus your net profit equals zero. For example, if your gross profit is 60%, and in this case, again, go back to what I said before, labour, and your overheads are 300, then your break-even point in terms of turnover would be 500,000. Simple way to do this is to take your overheads of 300, divide it by your GP, and you're going to get that 500,000. And that's going to tell you whether or not you're in front or not. A great exercise for you to do in your business is to go back tomorrow and go, well, what is my GP? You should know that. Remember what I said before, turnover is vanity, profit is sanity. So what is your gross profit?
Yeah, particularly where we're at in this world at present, it's so important for every business operator that's actually out there, is they absolutely understand how much margin they're making out of their sales or out of their income. And just as importantly, what have they got to generate to make sure that they're meeting their break-even point?
Absolutely.
At the moment, with some of, so for example, we talked about rent relief and some other things already earlier in the presentation. There's a lot of debt that's building up in certain cases for a lot of people that they haven't necessarily had the cash paying to pay yet because the rent's being deferred with the landlord, or maybe it's loan repayments. The bank's actually not having or asking people to pay at present, but that will come back. So the cash flow at the moment is okay, but once you factor in the requirements of what your business is going to be, then the cash flow break even may well be substantially higher than what it currently is. So
Yeah.
Really important that you understand your numbers right at the moment. And if you haven't got those numbers, then that's a great opportunity to have a chat to Troy or the team.
That's right.
Here at Advice Co that can really help you get through and get those numbers so you can operate with some degree of certainty.
So to help you with that, or to, some questions that you could ask yourself, so how do you manage your cash flow? It's a bit of a rhetorical question, but a great thing to ask yourself all the time. In most cases in business, particularly small businesses, but just as relevant to not-for-profits, it's the number one thing that keeps small business up at night. The concept of profit, or the concept of surplus, the concept of the matching principle, income with expenses, is secondary to, Troy, how much money do I have in the bank today, and when do I need to pay that money? Because there's no money in the bank, well, the ship just runs aground. And that's really what keeps businesses afloat, having a buffer there, a working capital balance, so that we've got enough oil in the engine so that we don't seize up. So some simple things. Look, as I said at the start, tonight's a bit about common sense into common practice, but making sure we've got some of those basics and using some of the tools.
Yeah, I think it's fair to say that a lot of the boards that I'm involved with, and also you're involved with, at a board level, cash and how long that cash is there and how sustainable the cash is in that business entity is absolutely critical.
I know, yeah.
It's going to be number one thing the board's worried about.
For those that are on this webinar tonight and receive funding from the NDIS, you'll know, for example, in the NDIS funding pack, it wants a 3 to 3.5 times expense cover ratio calculated every month to make sure that you've got that there. They want a buffer of between 25 to 35% of working capital over and above the cash reserves. So things like that, these ratios. Ratios in themselves have some limitations, but they're one aspect to managing your business and knowing that certain things are being ticked off. A couple of things there, I won't talk through them all. Have a debtors collection system. Go out, make sure that 1, the customer or client gets an email. 2, it's followed up with an SMS. 3, it might be followed up with a letter. 4, it's followed up with a more firm email. 5, that's a phone call. 6, it's a follow-up letter. Automated, systemized, and that might take 4 weeks to get through all of that. But very, very effective, very systemizable, because, as I've said there, communicate, ask early.
Yeah, and there's even providers actually out there that work on the basis of some of the apps and support tools there that will actually help fund some of those matters as well too. So
we'll do it for you. You come down to one of those ones down the bottom there. Know your strengths and weaknesses of your teams. Sometimes some team members won't be comfortable asking for money. Others will be. So just be mindful of that. Weekly reporting, access to data. I can't stress that enough, is having a quality data system that you can look at a moment's notice and say, okay, well, this person's behind in their payment terms. What are we going to do about that? Have the communication early, be persistent, know your customer, know who you're going to extend credit to. Some of the horror stories I've seen in the last 8 weeks, not so much here, but certainly talking to other professionals who have been exposed. We've got some sister firms up in Brisbane and the Gold Coast tourism facing who have been swimming with skinny dipping for a long time. They've been caught out and they're not going to get paid, and some of their clients will go bankrupt, and therefore they will go bankrupt. So don't be that person who swims naked. Have the system and don't let success that you may or may not be having hiding any of those sins that you may or may not be doing.
I think it's a really good time to take control of your team and having a look and just analysing the roles that each member of those team members is providing and making long-term decisions about the value of what they're doing and how they're doing it in the business, because there's great opportunities to free up team resources that are currently spend time crunching and creating a lot of these numbers, which absolutely technology can do it faster, more efficiently, and more effectively, which frees up that time for that staff member to be focusing on some of the real value add items, particularly in the not-for-profit space. So it's not technology can in certain circumstances reduce the headcount if you want it to reduce the headcount. What we see a lot of successful people is they take that extra people that they're saving doing stuff that adds no value and shift that team member to doing something that's adding high value. So therefore, you're then getting the growth equation that we talked about there previously.
Agree, David. They're doing the things that where business is going to get to. Staff will need to be multi-autonomous, multi-skilled, different things that they're doing today. And back into COVID, this is what's going to be required. I mean, you would not want to be, for example, a holder of commercial office space in Sydney at the moment. People aren't going to work in the city anymore. They're going to work from home. Business is going to change. So we will not be immune from this. Not-for-profit will not be immune, and business in general will not be. It's a great segue using technology and applications for my next slide, which is, part of what our role is. We love Xero here. It's an app that helps us get some of that data that we talk about. But just quickly, that top point there, XeroCon. It was a conference that David and I went to, and I brought up a couple of slides here to show you, because when I went up there and we saw this, it was really, really important to see, for example, how the US, which is typically a little bit further ahead than us, compared to Australia in terms of innovation, technology, and embracing some of these things that you can do in this downtime. The first one was this, is that, in the United States, when I look at the top companies in the United States, Apple, Amazon, Google, Microsoft, Facebook, you might see some common things in those companies. What are the common threads? Well, they're all relatively new. If you look at the date that they started, 1976 for Apple, Amazon, 1994, Google, 1988, relatively new, embracing technology, embracing innovation, changing the way that the world is working. When I look at the Australian top companies, what I see up there is still that we're probably not quite, our top companies here are not innovators yet. BHP, 1885, Commonwealth Bank. What it says is that where it's going is in the US, they take this position a little bit earlier, we'll come in behind that. And what it means is for small business is to make sure that we're embracing that as well. Embracing technology, using data effectively to, do the things that we need to do and make the decisions that we do. So my slide here is technology for not-for-profits, embrace. We need to be doing that. So what's relevant here? There's a couple little ones here that I can throw to. Do you have a board pack? But more importantly, how long does it take you to do it? Can it be produced automatically within 2 or 3 days from your end of month cutoff? Then what data does it have in it? Does it have financial ratios? Does it have a cash flow? Is there a budget by cost center? Does it break up all your income, your SIL, your corporate donations, your marketing efforts, client numbers? What does it break up in there, and how quickly can you get that data? How does it forecast your cash? Data collection. There's a little program called AppSim. It's just one of dozens that helps you collect your debtors faster. And the last one there, document management and data entry. Look, if you're not using something like HubDoc or Receipt Bank, you need to be, because these systems enable you to quickly bring in your records. Your auditor at the year end, if you get an audit, rather than having lever arch files and all of your stuff there and they're going through them, they're going to save time, they're going to save money, because quite simply, they're going to log into your document management system. They're going to say, where's your invoice for this? And it's going to be attached to your accounting system. What does that sound like to you? That sounds like cost savings, it sounds like innovation, and it sounds like good governance.
Yeah, I think the key component for a board is if you've got good quality information that's coming to you in a timely manner, then effectively you have the tools at your disposal to actually make quality decisions that can take the strategy of the not-for-profit to the next level. If you haven't got that information, then you're trying to make decisions on what you feel in the air or you sniff and smell of things, you won't make the same quality decisions.
Yep.
And more importantly, you're putting yourself at risk. So effectively, decision systems backed by some of these tools are quick, efficient, cost-effective, and would traditionally allow smaller charities that don't have the resources to put a full-time CFO on, which may cost you $150,000. You can do it at a fraction of that cost and still get the same result.
By the way, guys, I just got a text from one of our helpers that said that couldn't see the video. So that's my fault. That's my fat fingers. I brought that back up. Hopefully you can all do it now. Thank you, Gil, who's sitting in the next room. So sorry about that. So yeah, I was just saying, if you didn't see this slide, look, you could probably hear me. just some great apps that you can use. But again, we can talk through those at that one-on-one. So just to move forward, where to from here? And just before I go into this slide here, have a quick look at your inbox in your emails. Gil here from our support team and Sarah, they're going to send you a feedback form as we finish off the webinar, just to get some of your feedback on how we've gone tonight. You might want to start completing that as we finish off, but really important to do, because that's going to unlock for you a lot of the tools that we've gone through tonight, and it's certainly going to help us get better at this presentation. And you can even put in there the fact that the screen went off blank, and that was your biggest criticism. That's okay. I'll learn how to do that better next time. So that should be hitting your inbox.
Yeah, the feedback's really serious for us. We take it seriously. We absolutely. This is core to what we do. It's part of our commitment to the business community. Is we are actively out there educating and being at the forefront and making sure we're delivering this type of information to the business audience. So we do really appreciate your feedback, and we can't really improve if we don't get that feedback. So
and David, it goes to what we stand for. You know, a name Advice Co. That's what we're about. We stand for advice. We stand for education. So really important. And that's what whether it's CEOs in not-for-profit or small business or whatever. But look, this slide here, look, really, this is just a quick slide to say, look, if you've just come tonight, just come to learning, you're going to get a bit of a learning spike, what we call results. This may have happened to you from other workshops you've attended or other conferences where you've gone away, come back pumped, full of energy. We've done the job, but maybe that's tapered off over time. What we really want to do is work with CEOs, work with not-for-profits, because that's an area that we love doing, just to support you, give you some direction, some coaching. And what we find is that when we stick with you over the longer term, your results just begin to improve, and we really look for value add in what you need to do. In some cases, we're a sounding board for you, being that CFO and that person that can sit with you and bounce off. It could be a property strategy. It could be whatever it is that you want to run past your board.
Yeah, I think it's fair to say too, part of one of our key principles in our business here at Advice Co is that we do have an absolute commitment to the local community.
Yeah.
So we do actually work, and we work closely with an allied charity that we're associated with, called the Count Charitable Foundation, and actively give quite substantial, not only of our time, energy, and expertise, but we'd also managed to donate substantial sums to local charities in this last sort of bit. So the community, particularly the not-for-profit sector, is something that's really important to not only what we do, but where we live in the community that our team's involved with. So we're absolutely committed to this space, and would appreciate being able to support local community groups out there that are attending this webinar.
So just to finish up, I hope you have got a lot out there tonight. If there's any other questions, Dave, that you've got coming through, they can shoot them through as we talk. But I'll just spend 2 minutes on this discovery and what does that look like, and what do we do in that session. Really, what we do is we spend some time with you, as I mentioned earlier on, and David at the start, really working out what are the issues in your not-for-profit. What are the things that you need to focus on? What are the challenges? Governance, it could be tax, it could be director's liability, it could be board packs, it could be staff. It could be understanding your unit costing model. It could be getting different chart of accounts. It could be single touch payroll, range of things. What we do, that first thing, is what we call a business health check. Really important for us. And quite simply, it's a bit of a one-pager. Just tells me a little bit about you, and we're going to send that to you for a bit of feedback for you to help me diagnose what that is. Second thing is, well, where are your business now? Having a quality conversation with you around, well, where is your business? What are the challenges that you've got at the moment? And where does the board want to go with the business? What sort of things do they want to see? That's the where you're headed conversation. We've got a 2-year plan, 3-year, 4-year, 5-year, really limiting it to about that range and saying, well, what do we need to deliver on? Politically, from a macro point of view, what are the threats? The old SWOT analysis. What are the strengths, weaknesses, opportunities in threats in our sector? And how do we grow ourselves to a size where we're robust enough to fend off those threats through great governance, cash flow, strong balance sheet, etc. What's your business potential? Quite simply, this is when we bring out that growth equation and we really dive into how that specifically works for not-for-profits, and then we turn that into a cash flow model. Where does the cash go? How do we forecast cash? don't really want to be forecasting cash any further out than around about 6 weeks. Longer term, it gets a bit more difficult, but really lasering in on that. So that when you present that board pack, you can say to your board, well, I believe our cash flow position next 6 weeks is going to be XXX. If it's negative, and when cash flow negative, fine. What do we need to reverse engineer today to make sure that we don't turn up cash flow negative? Do we need some more funding? Do we need to get more leads? Do we need to reduce wages? Do we need a lease agreement? Do we need to go get a government grant? Do we need a state government, etc., etc.? All of those sorts of things. Trying to, it's the old saying, the best way to predict the future is to create it, and that's what that can help us with. So what are the next steps? Next steps, really, love to get some of that feedback from you on tonight on what David and I have done. We're here. You've got our email addresses to answer any of those questions that you may have. If you don't have one tonight, certainly happy to canvass it in our one-on-one when we get together, and we can go from there. Really hope you enjoyed the presentation tonight. Last thing I've got here is a bit of a legal disclaimer, which is interesting that it's coming next. But then finally, any questions? If there's any other late questions that you have, David, is there anything else that you can see there on the Q&A? I can see one that's popped out.
Thank you for the feedback, Deborah. I'm very glad you appreciated the session. We're very happy to present it to you. So basically, on behalf of Advice Co, if there's anything further, you'll have the opportunity to have a chat one-on-one with our team. But on behalf of ours, thank you for your attendance, and stay safe and positive.
Thank you all.
Thank you.